Let's check in on the equity markets here. Stocks trading near the flat line, lower as investors await Fed Chair Jerome Powell's big speech in Jackson Hole Friday. As part of the Fed's annual economic symposium, investors are hoping to gain a little bit more insight into which rate cuts and what type of rate cuts are expected this fall. Here to weigh in on what a rate cut means for your portfolio, we've got Francisco Bido, who is the FM Investments Head of Quantitative Research and Portfolio Manager. Great to have you here with us. So let's just start there. Broadly speaking, broad strokes, what do rate cuts generally mean for people's portfolios?
Well, in general, that's going to imply a reassessment of the valuation models and so on. So in general, the stocks or equities in general look more attractive as rates start to go down. And of course, consumers do benefit from this, retail and even corporate expenditures, capex expenditures and so on. As corporations, figure they can spend more on computers and whatnot, refinance your home. There's a lot that happens when interest rates go down or get cut a little bit. So that's going to benefit the economy in general.
Is there one major portfolio pivot that you anticipate investors might enact, or that investors would be apt to make sure that they are rolling out in terms of their own strategy once we do get a sense of how long that cutting cycle is going to look like?
Sure. I think investing in well-established companies like Home Depot, it's a given. We own Home Depot on several of our strategies, as well as one of the Magnificent Seven, Amazon and so on. They are solid investments long-term. In terms of Home Depot, they provide a dividend, and any hints of inflation, they can pass it on to the consumers and so on. And it's a very well-run company. So Home Depot is attractive to us. And likewise, given their earnings Target and Walmart, they already popped some, but, there's still a lot more to go there as well.
What do you think the thing is that Fed Chair Jerome Powell could say during his Jackson Hole address that would change the tenor for the market so that the markets would latch onto the most?
I would say perhaps reinforcing the fact that there is a softening in labor markets and acknowledging that the Fed is data-driven. So that would hint, investors, hey, I'm looking at the data, which we know they do, but it will be something like that. I'm not so much into reading ahead of, trying to read the tea leaves or anything like. I'm looking for clues. I would like to see the data. And the best way to do that is really position yourselves independently of what the Fed might or might not do. And the way that we do that is by focusing on earnings and revenues acceleration. Look at the numbers. If a company can generate, increase in revenues and, increase the bottom line at an accelerating rate despite inflation, then that's a good company to hold. If you just go by that, then you're not so concerned about what Powell might say or not say. But in general, if he gets hints about the data about labor markets, I expect the market to pop up.
Does the data from what we're seeing thus far indicate to you that the Fed will be able to avert a recession?
Oh, absolutely. I don't think it's that bad. I think a slight slowdown at this point in the cycle is expected, especially coming out of COVID and so on. And remember, the bears out there who have been calling for a crash landing haven't seen that. Eventually, they'll be correct. There will be some kind of crash landing, but, market has been good at predicting the last 5 recessions, out of the last 3 and so on. So we know how that goes.
How do you expect the markets then to react to today's Fed minutes? Because that'll just be kind of a backwards looking kind of vibe check, if you will, from the previous meeting versus what we hear from Fed Chair Jay Powell on Friday.
Well, I expect more of the same. It will maintain itself in the neutral zone. They want to hear the real deal. They want to hear from Powell first for any clues or hints and take it from there.
Francisco Bido, thank you so much for taking the time here with us today. FM Investments,
My pleasure. Thank
Head
you.
of Quantitative Research and Portfolio Manager. Appreciate it.